Welcome to Set and Forget Traders, where precision meets patience. This isn't guesswork, it's strategy, structure, and the smart money's roadmap. If you're tired of chasing trades, strap in. We'll show you how to trade like the banks and not against them. If the market noise has been costing you money and peace of mind, you are in the right place. Hit the subscribe button. This is where structure meets mastery. Welcome to US dollar index analysis, and this is the most profound application of the understanding. So we saw that on Friday during the NFP here. During the NFP, the price really dipped just after the buyers taking profit at the proximal demand zone. All right, at the proximal demand zone. So the buyers took profit, and the price, as a reaction, the volume of the demand orders will definitely reduce because buyers have taken their profit. So the next day during NFP, it was just a reaction of buyers exiting the market, and the same engulfing with the sellers, the smart sellers pushing the price down. But this was a very big pullback, more than 1,663 points worth of pullback, but it was the first day of the month of August. Yeah, we saw big moves of prop price, but we saw it, we anticipated for it, and we walked out the week with full of rights. All right, look at the 4-hour time frame, and you'll be able to spot how our demand zone helped us. Our demand zone helped us to know where the buyers are going to take their profit. And right after, this is the 4-hour time frame. Right out of the dollar index buyers taking the profit, you can see price pushed low. And you know there are no existing buyers here. That's where the price went and took profit at the previous demand zone. All right, quite a good understanding. So buyers will supposedly be around this area, and if not, they'll have to come down again 1,560 points below to this level so that they can buy here. So this trade looked like this intentionally, and that's why we were able to. Checking on the daily time frame back again, you can be able to spot that we had our first entries order at the proximal demand zone. This is the main demand zone. Here, the main demand zone is around, you can see the reaction around the previous main demand zone, 199.058. So our price path, that was the first wave. And now the second wave, we were targeting to take price above the demand zone into the next pivot, and it was right executed. We took our buy on the 24th of July. The price was at the demand zone 97.143. Price went up through the next demand zone into the next pivot. Check out our analysis yesterday on the 31st, the last day of the month of July. We could identify the buyers that were going to take the profit at the next proximal pivot, not proximal, the pivot demand zone, which is 100.274. And that's how you saw we were able to lead the leaders in thought and to lead the laws of demand and supply. And that's how we were able to walk out the room full of fights. So intentionally, this demand chart helps us to identify where the buyers are taking their profit and where the buyers they're supposed to exit the market, because basically knowing where they enter helps you to avoid early entry, and knowing where they exit allows you to take your profits quickly before it's drowning back to the sea. Right? So if you're a buyer, if price doesn't close above this demand zone, 199.058, don't buy. All right, that's a good advice. Wait for price to go above 99.058. Less, please put your orders at 97.1 2.143. All right, avoid just being emotional with the price and just trade below. Yes, the previous analysis we were able to decipher, guys, okay, because we are targeting to take price from this 97.143 pivot demand zone into 102.274, and we could identify the midpoint of this price path was at this order block here. This is the half where we spot a rectangle. That's the half here. That's the half of the price path we were trying to take, and it looks something like supposed to be there. Yeah, we identify this level 98.654 because that's the midpoint of where we were supposed to take our demand orders at and where we're going to take our profits, the next pivot demand zone. And it's so surprisingly, because after the buyers took their profit out of the market, you can see that the price closed just at that level. Magic. And that's where the wick closed. That's pure magic. This is the dollar index. It's basically the whole face of the strength of dollar, US dollar in the market. And this is supposed to be the most interesting haul of information to know what the US dollar is supposed to. Because the entry and the exit just coincides with our previous analysis sentiments. So that was the first day of the month, 30 more to go. Yeah, basically today is on 3rd of August. Yes, 30 more, something. We are yet to see more days. So how will you trade? Where will your next anticipation be? Will you buy? Will you go low? And you know, the price has placed us in an equatorial midpoint of argument, and basically there's nobody who's gonna be the best, because the price is half. Either we lose half of it or either we gain back half of it. But we already took the profits and the price came back to it. So we made 100%, and then we made 50%. That's 150. But somebody who was in 100 winning percent has come back to 50% because of the pullback on price. Hope you understand it. So knowing where to exit allows you to take your lots quickly and lock your profits, and then you can be efficient enough to anticipate for the next reaction after you're taking your profits. You're trading like the banks. That's how you feel they've taken their profits. And that doesn't mean it's a change in wave. It meant the volume reduced because the buyers took their profit. So price might push back up to 100.274. You might be asking, we have not yet checked the supply chart. Let's roll the next analysis to be the supply chart. This chart here allows you to know where the sellers make their entry and where the sellers take their profits. If you're new to this analysis, the supply chart allows us to know where the sellers, if the sellers are currently present at the market, they definitely need to take the price into the supply zone. So basically, I'll just use less than 2 minutes to identify these supply zones. With confluence of demand and the supply charts, you're able to decipher very much easier to know where sellers are supposed to take price. So the current supply zone is around, the proximal line is 98.248 and the distal line is 98.026. So if price is going below, if price is coming, we need to attract it at this level, all right? And if there are no sellers, we will know that was just a reaction of the buyers taking profit, and now the sellers will now have to wait for price at the main supply zone. Do you see that trap? Yeah, you just don't make an entry based on naked chart. if price doesn't come to this level, we'll have to wait for sellers at this level, and then that will be some kind of our seek. I'm trying to move this candle. It's okay. So I hope you got that right. The previous time the price was at the supply zone, you can see this engulfing candle that happened. So watch out, because we've been having these lows for the last 5 years intact, never altering anything, but you're here just to provide everyday statement of what price does in response. So sellers are supposed to push price in the next 390 points down. Then when the sellers have taken their profit, buyers can decide to come back, but buyers now need to be around 97.143. So 97.31 is a good entry back. You can wait, let's see. So then last analysis, we'll check the moving average again. From the monthly time frame, the retailers moving average shows us, the retailers moving average is showing us that the support is way below. The support is around 96.434. The support is way below from the current price. But the previous month, the support allowed price to push really higher, more than 3,533 points up from that support. So if you're selling, don't even try to go below. Checking on the weekly time frame, you can see the sellers were first, the buyers met this big resistance at 100.328. Basically, this moving average allows you to see through the trend, how the trend is being set. And if buyers need to push price, they'll need to make an attempt again to buy up to 100.328. So if you're buying, don't exceed your orders at 100.328. On the daily time frame, the buyers, the sellers were first with support. The sellers are having the support here at 96.624. That's the daily time frame. Basically. So let's check the institutional moving average starting from the monthly time frame. Same outlook, but you expect resistance to be highly around this area, not the current one. So let's wait and see. On the weekly time frame, again, the support assisted buyers to push up, and then it shows us that buyers have a chance to push price back again up to 99.480, and then the last wave, which will be the long one, should be to take price into 101.020. On the daily time frame, the institutional held their last position at the support. No price pushed up. Their support is at 98.4, and then they should take price higher into 100.697 area. Support. I'm just saying support, unless price breaks through the support. Done for the day. The last one is the simple moving average. The simple moving average allows us to see a smooth signal. All right, and you see the monthly candle closed just inside the resistance, and now the monthly candle has started just 1 day old, but already taking more than 40% of the previous traded range on the weekly time frame. So we expect sellers to push again, and the support must be at 97.558. On the weekly time frame, you can see the same level. You can see there was a resistance at around 100.293. Very precise signal. Very precise. On the daily, you see the previous time we had a signal around these areas. It reacts very well. Very precise. So we expect our biggest hit to be at this level. Selling USD will be at this level. So we expect a push up, a small one, until price reaches this level, and then we sell it. Yeah, thanks for staying tuned up to this moment. That was 15 minutes, more than 15 minutes spent with you, and we hope you had a good catch of what we anticipate. We can just recap. We say on the daily time frame demand chart, we were able to see that the price used our demand levels, pivot zone at 97.143 to push price higher, and then the buyers exited at the next pivot demand zone 100.274. What happened after that? That was a reaction of buyers taking profit. On the day of NFP, price fell down, and that was the first day of the month of August. So it came back up to the midpoint of the previous traded range we had anticipated. You can check how the previous reaction happened at that half of that trading range, and the same day, the same level has allowed the week to close at that level. So be sure to consult us and join our community. Join the dollar index trading room for you to receive this informed trading counsel. Thank you, be blessed, and may the good Lord guide your path. Cheers.